Hello traders, good morning, good day, wonderful weekend, actually a week. We just started to everyone. How are you today? And please give me some okay if you can hear me well. You can see the screen. And hello to everyone from Canada, Ontario. How was your weekend, guys? Was good rest? Some good tennis matches, true, some good football matches. Snow, yeah, it's snowing here also now. But that's beautiful. The white color with the sun. Beautiful. Right. Catriona, we now have the cryptocurrencies. Right? So that's unstoppable. They open all the time, 24/7. So that's really, yeah, it is available. It is available during weekends as well. All right, so guys, let's begin. I can see some new names on the board, and welcome to the Traders Academy Club. Welcome to our family. This report, guys, is most important for you, for all the new members. That's where you will have to watch this video, how to read the reports you get. The recommendations for the most important webinars, they all are important, but these are the most important ones in order to understand what we do and understand the language we use here. So please, on your free time, it's very important to go through all the report, which you can find, of course, in the members area. Here you can find this. Oh, anyway, inside the members area, I'm going to log in now, but you will get inside, and there is trading report, market session report, so everything is available there for you. Okay, so let's begin. William, no worries. Let's begin, guys. So let's start with the we follow the report and updates accordingly. We start with all the euro pairs. Okay, so the euro dollar, this is what it offers to us. So we got a breakout previous week, right, of this trend line. And the thing is with the euro dollar now, that it can completely easily make this move from the weekly cycle, right? It was a kind of a range here, big move to waves correction, and slowly regain the momentum to new highs. It's more than possible, and technically it's very doable and logical. Very important to say that, right? But where comes the little trick here? That we've had this little cycle by its own, only this leg from here to here on a daily. And if we put the Fibonacci numbers on it, what do we figure out? That if we do treat it as a special cycle by itself, we never reached the 38% retrace and never reached the 50% retrace, which are, again, more than doable. So the euro dollar is on a very tricky situation and conditions, and it could literally do anything it wants. It has false break on the top, 1, 2, false break on the bottom, which makes it even a legal range, right? So for us, if it is a range, we would want to get 2 waves up and look for sells. And after that, 2 waves down, like we had here, and look for buys. Right? So the euro dollar is currently completely in both directions tradable. The current momentum specifically, as long as this trendline breakout holds, is bullish. Right? As long as the trendline breakout holds. Because if we go below the trendline again, that's a way for Mr. Market to tell us that just a fake breakout, and then this bearish hidden divergence get into play, and we would expect that to continue lower, right? But as for now, at this stage, the beginning of the week, what do we have is this bank zone that we saw before, right? The inner area with this is the inner area, right? And a fast breakout. And while it holds, the momentum remains actually bullish. Now, what happened during the weekend is that Merkel said that she is most likely not able to build the coalition. She reported that to the president, and the president on the opposite side says, put the ego away and make it happen. Of course, it was not just to Merkel, it was to all the parties that are supposed to be in the coalition, right? And this is exactly what is causing the euro dollar currently, these little zigzags. Since the beginning of the week, you can see the fast drop down, immediate retrace up. Now we may again move down. That's normally what happens in speculative period, and this is what we have right now. The traders are not sure about what will happen with this current coalition attempts to be created, right? And the president was very clear by saying, try to solve it out without taking it again to public and to voters. And that's where the euro dollar stands. We are in completely both directions. While this trend line will hold, we can start looking for possible buys. If it falls breaks and makes it moving lower below the trend line, that's a bearish call and bearish expectation. And in that case, if it happens, we are moving all the way to below the bank zone, and 113 in that case could start to be our possible target. For your question, Gary, the euro dollar, yeah, it was a head and shoulders. Beautiful one. We have been talking about it in a while, but you can see itself, right? You can see yourself. It's not holding it, not respecting it, which means it's pretty weak sign. Right? Breaking through back and forth normally present a weakness. Okay, so that's for the euro dollar. So our direction now completely both, as you can see, and I wanted to explain you why, guys. The current momentum though remains bullish, while the trend line breakout is holding as well. All right. So that's all. That's for the euro dollar. We can see it also bouncing from very good serious action zones. Right? Now it has all the reasons there. I decided to add the action zones. I made this little light color so it doesn't really take our the eyes here. You have it on the crystal ball. You have it in the Scorpio. So these levels are there. I decided to edit so it's a bit more visualized and easy to see that when it comes with cycles and with levels. Let's continue, guys. Our next pair and our rock star is the euro pound. On the euro pound, we moved bearish from the previous week, and this is where we got it, right? That was our range. Now we were looking for two waves retrace. We got a two waves retrace. Now this is not two waves retrace we can trade, right? But we definitely can trade on the 1 hour chart. So how do we do that? Always from the time frame where we spot the cycle, we can look on one lower or two lower time frames for setups. In our case, the cycle is daily and 4 hour, right? This is the range. So we can definitely deal with the 1 hour. And on the 1 hour, we had a beautiful breakout. Oops, sorry. We got a beautiful breakout right here and a further continuation down. So for the euro pound, the plan is simpler than many other pairs. While we are below the range, the top of the range, the idea is bearish, the view is bearish, and I would expect it to reach the bottom of the range and later on, very likely to start and develop the second leg down to the bottom of the weekly range, which is right here. Yeah, it is far away for now, definitely. It's a very long term, but we just follow up our direction. So as long as this stop holds, we are bearish. And for those of you who are in the sales right here, this would be a great place to start looking for possible cash outs. We are forming here a triple cycle, right? And very likely this gap from previous week should be closed. Right? And we will see some potential retrace reaction. So move stop loss to break even or partial cash out around this area right here, around 088.50 or 088.40 makes sense. And we also have the bullish divergence here that will allow possible retraces on the short term. As for the euro pound, John, for your question, yes, the action zone could be adjusted here. That's your colors. You play here with the colors. You've never been in the settings, huh, John? You can play with the colors as much as you want. Okay, so that's for the euro pound. We remain bearish. Euro versus the Aussie is another pair we have on the list. And euro versus the Aussie. Now this one, where it comes interesting and tricky on the same time. Previous week, we got a massive breakup right here. And beautiful continuation. Now, the pair still has the cycles here, still has some action zones. We can see this magnet area, right? Still dancing around, but it does not have currently, any bearish reason. Which means, in simple words, this pair is still under bullish pressure. So for us, every pullback in two waves or bottom of the range is a buy opportunity. Action zones on the lower time frames, like here and like here, are the places where we should be looking for the possible bullish retraces. What would be our invalidation for the bullish run? If we get two false breaks and convergence, which means one more high and lower lows, right? Because we do build one false break here. If we get another one and then lower lows, that's a game over for the bulls. And alternatively, three waves down, two waves up and breakout. 1, 2, 3. 1, 2, breakout. If that happens, game is again over for the bulls. As long as it didn't happen, the momentum for this pair remains bullish, and we are aiming to the magnet zone, which we have right here around 159, 160, and this is also the top of the weekly range. False break here, false break here. That's a weekly range. We can definitely, on the next coming several weeks, we can see that right here. If there will be no fundamental surprises, which the way we just got it on this weekend really means that it could happen. So that's for this pair, bullish, as long as we don't have any invalidation scenarios. And our invalidation scenario is false breaks with convergence, or three waves down, two waves up, and a breakout. That's for the Euro Aussie. Okay, next one on the list would be the Euro versus the Canadian. This pair is a bit more trickier, right? Because we do have this weekly range. We still stuck inside the daily range. From my point of view, from previous week, after breaking these two trend lines, the pair is under bullish pressure, and I think this pair could make higher highs, and this is the short invalidation for us. Break below this zone, the zone of 147-ish, break below that makes the whole bullish scenario be irrelevant. But any two waves up, down, could use us as an attempt for buys, which means we can start looking for buy setups. Okay, so as long as we don't have any invalidations, which means 3 waves down or false break with a new high above this, right? False break and lower lows, as long as it didn't happen, our pressure here remains bullish. How far I expect this one to go? Well, basically the zone of 152, 153, first of all, and then the top of the weekly, which should be 155 or even higher. So EuroCAD, as tricky as it is, and it is bullish with this invalidation. It's pretty far away, but we need 2 waves down or bottom of the range to go long. One more euro on our list is the euro versus the Kiwi, and on this one, this is what we have. This is the weekly. Let's remove the lines. Start drawing from the beginning here. This is the, I will start with the monthly. After the 3 dropping cycles, we do expect deeper correction up, right? So we can see that going all the way to 50, which means technically it could take us towards the level of 2, and I think it might in the future. I think it really might, but since this is a monthly cycle followed with a weekly confirmation, that's really too far away, right? What we do have right now here is on the weekly chart is triple cycle down and double cycle to the upside. There is a bearish divergence forming here, and we do have some action zones on this pair. Now, if we put the levels, we can figure out that the 100 was killed, right? So we can still see the dancing around this zone and getting slowly closer to the 161.8, and from there looking for the sell setups. Watching on a daily chart, we can see that the current leg is basically providing us most likely something like that, which is special cycle. The divergence start to develop here as well, and we do start to get some bearish signs. The momentum currently is bullish, and it's pretty clear since it refused and failed to get 2 waves to the upside and breakout, right? Just want to remind you, we were looking for 3, 2, and breakout. Since we never got it, the momentum is remains bullish. But we definitely need to start look for warning signs. Warning signs and invalidation signs on this rally would be the same as like with the Euro Aussie and the Euro Canadian. 3 waves down or false breaks and range. Currently, we have none. Right? This is only 1 leg. We don't have 2, and we don't have 3. We don't have 2 waves retrace and a breakout. As long as it didn't happen, every 2 waves down is still a buy opportunity for this pair. And the levels for that, we can see beautiful levels here and here, levels where we can look for the possible longs. So for the Euro Kiwi, the pressure remains bullish. Yeah? Both directions for us would be tradable, of course, because we are approaching the critical zones, right? But currently the momentum was and remains bullish. Next one on the list is the euro versus the yen, and this one you can see by yourself, guys, still dancing in this range, right? Still dancing inside this range. So unfortunately, nothing really clear from this pair yet. If we manage to break and hold below this range, it's a wonderful call that this triple cycle comes into play, and we are aiming the 127, 124 zone. But we can see this pair has troubles, a lot of troubles to break the zone, this zone of the range. It's stuck there for a long time now, playing back and forth, back and forth, back and forth, providing us nothing clear. Therefore, the euro yen has both directions tradable and acceptable. Currently, we have nothing because it's just straight move without real divergence, without real levels, without really nothing. And that's how manipulative, I would say, or completely speculative move look like. And that's how it looks like. Fast moves down with the news from Merkel. Fast move up after the news from the president in Germany. The speculation there is very, very high. The setups are very not clear. The euro yen remains in both directions tradable as for now, but it also, at the same time, has really nothing clear and obvious to trade. And this is why it remains on the last part of the list, together with the euro franc, which from one side has the critical zone of 117, 118, right? This area for us. It had false break, false break, false break, but it never got us yet any convergence. Any convergence. And that means we are still in both directions tradable for this pair. This would be the convergence level. If the pair managed to break this area, we become only bearish, looking to sell rallies. As long as it didn't happen, the bullish pressure is yet on. The alternative for us, instead of getting the convergence, is 3 waves down. Do we have 3 waves down here on the 4-hour chart? No, just one leg. Do we have 3 waves down on the 1-hour chart? Also, no. Right? It looks like, oh, but that could be 3, right? 1, 2, 3. But two things here are very obvious. One, we don't have a bullish divergence, which means ending of the triple cycle. Two, none of the legs here answers the two rules, the two candles rules. Right? And if we take a look here, that's the last two candles. The correction never broke this high. So this is not valid correction. On this move down, that's the last two candles rule. The correction never broke it, so it's irrelevant. On this move down, that's the last two candles rule. And only now we get the first correction, which makes this as a first leg. So the bottom line, we don't have convergence, we don't have 3 waves down, we don't have any bearish sign. And that's why in such opportunities, bullish pressures, like with trend lines, like with action zones, like with a bullish hidden divergence, still provide the buy opportunities. If we don't have any sign to the bearish, the pressure is yet bullish. Make sense? So this is about the euro franc, and if we get the convergence or 3 waves down, remember, the game is over for the bulls. We move clearly to sells. So for euro franc, both directions are completely tradable on the intraday, on the short term, using the systems, because of the reason of the levels. We have the level on the daily, we have the confirmation on the daily, we don't have any setup based on the cycle in order to become in one direction, and we still want to enjoy the volatility that this pair provides, right? And in that case, if we don't have any specific direction, cycle, momentum, both directions are completely tradable on the intraday, which means systematical usage. That's all for the euro pairs. Any questions as for now? John, thank you very much. Any questions about the euro pairs, guys? Any of the euro pairs? Perfect. No questions means we move on. The next pairs I would like to cover would be the dollar exposed pairs. Dollar Canadian would be the first one. As long as this top holds, we are looking for the sells. We need two waves up and a breakout. We got these two waves up on Friday here, right? And these two failed to gain the momentum. And there was a warning sign here. And how do we get a warning sign after a breakout? Like this. We got a breakout, and after a short time we got a bullish divergence. This is a safer Mr. Market about what? Time to be careful, right? Now this first attempt failed on the trend line. This is the bigger trend line. Oh, let's erase the lines to be clearer. This is the current trend line that is developing. We do need to get it broken. We do need to go below. We do need to regain the momentum down. We do need to start to see the pair creating lower lows. If it refuses, we have no reason to call it a continuing bearish momentum. Right? Divergences are there on the 4-hour and the 1-hour. Scenarios for the bearish side is there from the weekly and the 4-hour. So we do need to wait for the setup. The setup for us is the break of the trend line. Okay, so this pair, that's what we are looking for. And the targets for that case, if we have it, would be, of course, the 38.2 of the daily chart, which is around 126, slightly lower. That's the dollar versus the Canadian. Dollar versus the franc, same story. After the two waves up, we are looking for deeper correction down, and we are looking for the 38.2 of the cycle. That's slightly below than 0.98. Now we have correction, which looks possibly to be two waves. After that, we are looking for the sells. We have this trend line, we have the resistance zone. As long as we hold below, the pressure for this pair remains bearish. So we do need two waves, and we do need the trend line breakout, and we can call it a continuation, aiming this area of 0.98, even slightly lower. As long as we are below the trend line, of course. Break above that could change the view. As for now, the view is bearish. We are looking for to regain the momentum. Dollar versus the yen. We reached our first target. Our first target was 112. That was reached on the last Friday. In order for this pair to become more seriously bearish, we must break this low. Because if it doesn't, it could be translated as a bullish hidden divergence and further continuation down. We do need the lower lows to gain the convergence principle. So This is what we need to see, right? But on the 4-hour chart, we also have triple cycle. 1, 2, 3, right? So technically, every 2 waves for us could still be a sell opportunity. In that case, to make it a bit safer for invalidations, we have the trend line and we have the zone of the resistances. As long as we are below, that's basically 113.50 zone. As long as we are below, the pressure on this pair remains bearish. So sell rallies was and remains the plan. We did get the first target, which was the 112. It was perfect. Now it's time to look for retraces and possible sell opportunities, resell opportunities. Okay, that's for the dollar yen, and our invalidation is this area, as I said, 113.30 up to 113.50. Okay, longer targets remain of course, the bottom of this daily range. Oh, that means 108. And yeah, it is possible for long run, of course. And that's about our dollar pairs, direct dollar pairs. Ivan, dollar franc, you asked about, could be dollar franc. Well, dollar franc, of course, could go and make it a bit more extending and make a triple cycle, definitely. And this is why we have the invalidation. That's exactly what we have the invalidation for, right? Currently, we don't have any signs for that because that was a double cycle up, 3 waves down on the 1-hour chart, 1, 2, 3. So 2 waves retrace considered as a sell opportunity still. And this is exactly why we have invalidation for this plan. We don't want to marry our idea, right? We definitely want to stay connected to the market. So as long as we are following the levels, following the daily and a 4-hour chart cycle combination, we're looking for sales. Break above that, and yes, we can start it, see that going higher. Above 101, there is a very good chance even to something like 103 on the longer run. Okay. All right, the pound pairs, pound dollar, very, very, very tricky conditions, as we can see. I'm still bearish in my mind, but we never get a trendline breakout yet. Many look like attempts, never yet a clear, clean trendline breakout and lower lows on this pair. As long as it did not happen, there is no bearish reason for the long run, and as long as we are below the range, not break and hold above it, there is also no reason for longer run, right? Scalping is, of course, always a different story. So in order to call the momentum bearish again, we must break the trend line and hold below it, not just break and spike like go up and retrace up again. We must break and hold that in order to call that a momentum. But the view for this one remains bearish, and I still think that this pair has all the reasons for something like that. Where from would be looking for big time longs, but I just don't see that yet. Okay, so pound dollar bearish while we don't have any of our invalidation, and that means break above this top of the range and hold above it. As long as it didn't happen, no reasons for any changes. The next interesting and on the same time with all the signs to be careful, that's pound versus the yen. So our invalidation for the sells is here. We had a beautiful ride on the previous week, creating lower highs, lower lows. But where is the warning sign come in place if we manage to break above the channel, which is a leg by itself, right? If we manage to break above it and start to create higher highs. If that happens, we are moving to neutral on the pound yen, sorry. Not bullish, not bearish, neutral. Just to see if that's for real, a real breakout, or just a fake stop loss clearances, because it's also popular in that cases, and further continuation. So pound yen, it's time to be very, very, very careful after the second false break. We got one here, now one on this place. Very serious time to be careful. Okay, and break above these highs of 149.50, 55. Break above that invalidates the short scenarios, the sell scenario. Okay, so we must be very, very careful here. Previous week we really provided some nice sell opportunities, and that was the latest one that we got here on these last two candles breakout and this move with a bearish hidden divergence. That was the last opportunity for us on the sell from previous week. Now it's really, really time to be a bit more careful. That's for the pound yen. Still bearish, but it does show all the warning signs. Pound, euro pound we discussed, right? Pound Aussie, where is our pound Aussie? Here we are. Okay. We are bullish on the long term. Here we are aiming the 182 and then 190 according to the weekly cycles. Okay, as per expansions, we can also see that suggesting pretty much the same. So 180 up to 182, definitely classical levels. On a daily chart, the pair starts to create confirmations. Well, it's slightly below than 180, but it's 177, and we are getting very, very close to this area, while the 161.8 is exactly there, the 182. So this pair is bullish, and despite the daily cycle that starts to show a little bit of warning signs, we do not have not a false break, not a convergence, not three waves down on the lower time frames, which is 4 hour or the 1 hour, which means in that case every retrace down for us in two waves or range is a buy opportunity, and we are moving higher. I suspect it's going to 177, 178, and then it could take us all the way straight to 182. So bullish it was, bullish it remains on the current momentum. Yes, from after that we will start looking for the sells, but as for now the momentum is clear here and it remains bullish. Pound Canadian, on the longer view we are aiming the top of the range, which is the 38. This is the range for us. Falls break on the bottom, falls break on the top, 38.2, and then the 50. So bullish. Do we have any warning signs from the daily about that? No. The only thing we got there was two waves on the 4 hour chart. 1, 2. Once it was broken, we are moving higher. Currently, no false breaks, no convergences, nothing. And that means it's bullish. Invalidation for the bullish scenario is here. Okay, so every pullback should be a buy opportunity. We have good action zones here on the 4 hour and on the 1 hour on the way. Every pullback down could take us higher, and this is our invalidation level for the buys. All right, pound versus the Kiwi, same story. We were aiming, and we are aiming still to the classical level of 2 here. And slowly, we are getting there. Do we have any signs against us on the pound? On the pound Kiwi? No. We were looking for possible trendline breakout, if you remember, on the previous week, to get this. Right? To get something like in this special view. 1, 2, breakout. Since it never happened, this pair just continue higher, break above this high, invalidates completely the short reasons, the reasons for sales, and there are no reasons for sales. The pair remains bullish. Invalidation for this pair is right here. Okay, with these two waves breakout after a bullish divergence. Okay, targets the level of 2. This is where we are aiming, and that's all. Any questions about that, guys? About any of this? Opponent we discussed, and we have the pound franc, and pound franc is the less attractive pair, simply because of the false break it suggests on the daily. It looks suspicious to me. I don't see any reason for anything clear here, to be honest. So pound franc I wouldn't trade at all for the longer run, at all, only for short run, and for this one completely both directions are acceptable. And the only reason here it's why I'm very careful with this one is because this pair reached the 38.2 and now dancing on it, reached the duplication of these two cycles and now dance around it, and a daily created a false break. So not like the other pound, this is the most suspicious one. This is why it remains on the last part of our list for the pounds, and I don't see anything here for the longer run. Only short-term trading, which means just to enjoy the volatility. That's basically all. Pacific pairs, Aussie dollar approaching the critical level. We have been talking about it for a while now, the 0.75 zone. It's here. We are there. Statistics starts to form up as well. We are coming to the critical area of the 20s. So it's going to happen, right, on the coming days. What do we need to see here? False break. We must get a false break. We do need to start create higher highs. We do need, we can have an alternative of triple waves, and that could be like 1, 2, 3, 1, 2, breakout. If it happened, beautiful. We have all the reasons for longs. As long as it didn't happen, it is still bearish. I would be very, very careful with the bearish here, just because we do start to create these divergences and these setups. I would be very, very, very careful with the sells right now, since we reached on all this journey down, we have reached the critical zone of 0.75. Now it could easily make some clearances here, back and forth, back and forth. I don't expect any clear volatility here. I might be wrong. I think it's going to slow down and start to kick out the bears. And for me, it means the time for bulls is coming. We don't have currently any reason for the bulls, but it's building up, it's warming up. I'll be very, very careful here with the bearish view. New Zealandian dollar, a new low, as suspected, as expected, bullish divergence, and statistics that scream to us, get ready for action. What kind of action do we need? It's exactly like with the Aussie dollar. false breaks, which we currently did not complete, and higher highs, which we currently don't have. Alternative is 3 waves up. Okay, alternative is 3 waves. Now we do have wave number 1, we do have wave number 2. If we get wave number 3, that's a call. We're looking for 2 waves retrace, breakout, and bullish run. As long as none of these happen, we don't really have a reason for buys. Right? But on the same time, I would be ultra careful with sells on this stage. We have the levels, which is here, of course. Right? We have the triple cycle on the daily. We have a bullish divergence. We have the statistics suggest these days to be critical. That's too much for Mr. Market. Right? Many attempts from Mr. Market to tell us be careful. So no, we don't have any bullish sign yet. But to start looking for sells now, it's pretty ambitious. We were bearish since previous week by breaking this trend line and lower lows. Remember this explanation from previous week? And we were looking for this trend line as invalidation for our sell view. Right? Since it never happened, the sell view continued and the bearish momentum continued, and this is why we got a new low. Tal, you're here? Oh yeah, Tal, you're here. This was your question from previous week, remember? And here is your reason. We never broke the trend line. We continued all the way to new lows, and the bearish momentum remained on. Right? By the book. That's what we call by the book. Plan by the book. Alright, let's continue, guys. Our next pair is the cross in between these two. Aussie Kiwi. Aussie Kiwi is in both directions tradable. Why? Because it has triple cycle. Let's start from the long view. The monthly and the weekly. We had this special cycle. So we expect further run. Also, this is a huge range for over than 20 years now. Pretty crazy, but this is what it is. So we are bullish here. Right? Bounce on the bearish bottoms, really good. But on the weekly, we are on top of the range, and on the daily, we created here 1, 2, 3. Bearish divergence, everything is pretty clear for bears. Due to that, on the short-term view, we can still get 109.50 and 108.30. Still possible, still doable, still tradable. On the 4-hour chart, we had this cycle with a false break, right? One false break on the bottom, second false break on the bottom, and then false break on the top, which means it is a range which now could easily create for us this scenario. And this is exactly why for Aussie CAD, the long-term view is only bullish according to the monthly and the weekly cycles. The short-term view is completely acceptable for both directions. And to be very clear here, if we do get this second leg down, that's a monster call from the market to start looking for very deep long-term buys. But for now, the Kiwi remains in both directions tradable. We were only bearish here, if you remember, guys. From the 113, we were only bearish. After making the false breaks from previous week, it's time to be careful. Time to be careful means simply that both directions are tradable. The bearish move might be still not over, and it looks very, 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 very doable and possible to push it lower. But on the same time, as the weekly and the monthly tell us we are going higher for long run, it's time to be careful with only sells. So that's for the Aussie versus the Kiwi. Aussie yen, we enjoyed completely our bearish run. That was our journey. 38.2 was reached, 50 was reached, and now the 38.2 of the weekly is reached. We do start to see some warning signs in terms of divergences. This is kind of a triple cycle. This is kind of a triple cycle. I suspect a slowdown. For me, the bearish journey is over. And I think the current condition would be best as neutral, but on the same time, it's too hard to say no for such a beautiful momentum. So on this pair, it's both directions from here are completely acceptable, while I would start be looking for buys most likely on this zone. You can see 24 critical days, right? So in between 84 to 85, this area, I would start looking for even short-term possible buys. So both directions are tradable here. We were only sell for a long time now from 89 zone. Now it's time to say thank you, Mr. Market. It was a beautiful journey. 2 or 3 weeks. It's time to get ready for possible retraces for Aussie yen. Both completely in play with some preferences for the buy side, for the buy directions. What would be the buy directions in that case? We need 2 false breaks or 3 waves up, right? Currently we have only 1 false break here, right? So we need 1, 2, 3, 1, 2 breakout, or 1 more false break and higher highs. Okay, that's the journey for the that's our journey on the Aussie yen. Aussie franc, same story. This is the triple cycle from daily. 50% reached on the bearish view. Bullish hidden divergence is forming. From my point of view, this is going to be the critical area here, where we are going to slow down and start looking for the buy. So Aussie franc reached the corrective area. Now it also, here's a correction, right? In a magnet zone. It has a bit further level right here. We don't have any reason only to become bullish right now. So this kind of clearance is still possible. But I think that the bearish momentum is running to the end, is coming to the end, and on the next several days we are going to form the bullish retrace. So Aussie franc, on the bearish momentum we've had, now running off, time to start looking for possible retraces to the upside. We don't have any sign right now, right? Only 1 false break here, which is good. We don't have higher highs, which is not good. We don't have 3 waves up, which is not good. So we don't have any reason to be only bullish. But it's definitely coming to this place. Momentum currently is still bullish, but the momentum is currently still bearish, but now it's pretty tricky to go long-term sells here, like we've had in the last couple of weeks. Now it's more like only short-term, like scalp the new lows, and game is over. It's coming to the end very, very soon. The next one is Aussie versus the Canadian. Now this one finally broke this 1 candle range. On the same time, this is stuck inside this weekly range here. Well, it also has a bullish possible divergence to form. So Aussie CAD For me, I know how many of you, for some reason, I don't know why, but how many of you are looking for this pair to trade. For me, it's yet not clear, and I still prefer to be here in a neutral mode. It has one false break, second false break never formed yet. If it will, we will start talking about possible buys. Currently, nothing. On the same time, there is no reason for sales yet. So Aussie cut to me remains, as for now, on this stage, neutral. I am looking for 3 waves up, or at least higher highs for convergence. We don't have currently any of this, so neutral it is. New Zealandian pairs. New Zealandian versus the Canadian. One false break we had here. Second false break is forming right here on this critical place, as you can see. It is a triple cycle from the daily. It has a second false break next to the bottom of the weekly range. Well, yeah, technically it could take us to the 85 zone, but it's very, very near the bottom. Action zones are in play. This area is in play for us, the 161 expansion, and the triple cycle from the daily. New Zealandian CAD, which we were selling all the way from the 090 zone. It's now switching the momentum. Second false break is forming on a daily. On the 1 hour chart, we could get triple cycle, 1, 2, possibly 3. If it happens, New Zealandian CAD becomes bullish. Okay? So keep an eye on this pair. It's happening. It's coming. It has great statistical confirmation in terms of days, 23, 25. And it's happening. So New Zealand CAD, we switch from the bearish we were to bullish. We start to look for buys. New Zealandian franc, also same story. Right on the bottom of the double cycle from the weekly. 100 is right here. On a daily cycle, triple cycle, 1, 2, 3 descending waves. Action zone is there. Marubuzu on Friday, which is a sell-off. One false break is happened. Second false break potentially happening. I think this is going to be the clearance zone, something like that, and for buys. So New Zealand franc currently neutral. We don't have anything here. Not second false break, no convergence, no 3 waves up, nothing. So New Zealand franc is currently becoming neutral, but we do start to pay attention for the bullish scenarios to happen. Those of you who were shorting on the run, on the beautiful rundown, with the bearish hidden divergence, with the trend line, it's time right now to become careful. Okay? And New Zealandian yen, well, this one reached the bottom of the daily, the first range. We still have the weekly range, which is lower, but currently triple cycle, triple shorter cycle looks really good. I think the bearish game is over. We don't have yet any false break, convergence, or 3 waves. Start to pay attention to that, but for me, the bearish momentum is losing itself, and I believe that the New Zealand yen also will start to provide a buy setups soon. So currently, the bearish momentum is still here because we don't have yet bullish setups, but get ready for that to come. We also have the statistics. We have the action zones, right? Statistics suggest us 23, 24, 26. Really nice zones. And that's all. Get ready for the possible buys. Currently, again, as I said, the momentum, yes, it is yet bearish, but 3 waves up, and then the game is over. As long as it didn't happen, we can still try to scalp it to the downside. Just be careful. Next ones, let me see. Okay, New Zealand we covered. Cat franc remains bearish on the short term. We do expect 38.2 and 50% Fibonacci, which is 0.7650 down to 0.7550. Our invalidation on this current momentum is the top of this move. Currently, as long as we are below, the short-term pressure is bearish. Long-term, we do want it to go low and buy heavily due to the weekly, the monthly cycles. So we do need these retraces down to get heavy buys. So we want to trade both. The current momentum is bearish, so we are after sells. For long-term, we are only for buys by the lows. Okay. And the CAD yen, which we also were in a bearish mood here, reached the first target 38.2 right now, today, creating triple cycle down. Right? So this pair, after this triple cycle and a bullish hidden divergence forming, it shows warning signs. It still remains bearish, but it does show the warning signs that retraces up are acceptable. This is also 1 hour chart triple cycle down. Right? So too many reasons to be careful, and we can even also get here some kind of 3 waves up as well. So CAD yen, we were only bearish, we reached the target. It's now both with short-term rallies are acceptable. We have this triple cycle, the big view from the daily, 1, 2, 3. We can start scalp it to the bullish directions. Okay, CAD yen, we do accept the buys now as well. Gold and silver. Gold bullish as long as we are above the low and above the trend line. We need 2 waves retraces, 1, 2. Start looking for the breakouts and buys again. Silver, same story, bullish while above this low here. Okay. This is our critical area. Oil. Now this one is very, very, very tricky and critical. To get it bearish, we need to break this low, but on the same time, no real bullish evidences, no clear 2 waves down, no clear breakouts. Too tricky. And if it's too tricky, it's better not to trade. Right? We got this attempt to break. You can see it becomes fake with a bearish hidden divergence. Too tricky from the oil on anything. I would call such opportunity clearly to be both for one reason. For the weekly, we still aim high to 50. But we are bouncing from the 30-80, the zone of 60s. No, it didn't reach the 60, but it was very, very close to there. We have the action zones, and we have a triple cycle from daily. That's enough to make us be careful, because also the 4 hour chart had a triple cycle with some extreme. That's a warning sign, and that's time to say oil. We do want to enjoy the volatility. Nothing clear for the long term. Very beautiful for the short term. And to enjoy this volatility, both directions are acceptable. First target for the sales, for example, is the 50%, which is 53.70, even slightly higher. For longer run, we have the daily cycle, right? So we can get it even to 52, right? And for the buy momentums, if it regains, we can still spike through the 60, So oil has nothing obvious in one direction, and we were bullish from 50 zone here. It's time now to say, okay, so Mr. Market switches that a bit for us. We are now bearish. We don't have anything clear on the long run, but it's obviously great volatility for intraday trading. Natural gas, where is my natural gas? Making the two waves. This one never successfully hold the momentum. This is the extended trend line. The divergence is very powerful here, so we are looking only for buys here, unchanged. Indices, while below this top for S&P, we are bearish. Nasdaq has no setup yet. Dow Jones, while below this top, bearish. We are looking for possible sells. Japanese Nikkei, bearish after these moves. So we need the second leg now. It was first triple down. We need two wave up correction and breakout. So this is what we are looking at. Right? And the sell-off. And same with the UK here. We need two waves up and breakout to go for shorts. As per stocks in our list, we hold 3. Nike reached with the beginning of the week our final target, 59. So all for those of you who long it here, cashed out around 54 on first target, now it's time for final target. And this is what we call a wonderful risk reward. Okay, so Nike update cashed out completely. Deutsche Bank, is my Deutsche here, reached a beautiful level of this cycle, 50% cashed out. Okay, another one that really paid us beautifully. And we have the mayonnaise, the Kraft Heinz, which also continues its bullish momentum. We are aiming here to the final. So 82, 84, 86 according to 4-hour and the daily cycles. 82 is right here, not far, and it will be a great place to start looking to cash out the first portion. And the last one, cryptos. The Ripple is my favorite, you know that, for the long run. As long as we continue to create lower highs, I suspect and expect it to break and move higher. Bitcoin, after making this convergence on the lower time frames, never got us two waves for possible sell continuation. So the bulls are here and control big time. Ethereum, we were in triangle inside triangle. So the first one was broken. It was on the 4-hour chart. Lower view was right there. We got a breakout. It was more like a ranging pattern for us here. Breakout, and we are reaching the top of the big range. I would cash out here. I'm not long here, so I'm on Ripple's mainly, and I am on Litecoin, and Ethereum classical. So those of you who are in Ethereum, I would cash out here, at least partial. Break above that, make a call for completely new high, but we are not there yet. So I think and suspect this zone to make some troubles. Here is my Litecoin, which I like as long as it creates for us higher highs, higher lows, bullish. Invalidation for the buys, only these low. I expect that to go much, much, much higher. Much higher. And the Ethereum Classic, we moved long right here. Move break even because that could be also leading for completely new highs. So those who are long on this place with us a couple of weeks ago, it's time to move break even here. Dash, for me, it's not clear. I've been asked by, I don't remember who asked about me about that. For me, it's not clear at all, Dash. I wouldn't deal with this one as for now. I think we have some better opportunities there. And that's all, guys. This is our plan for the entire week. Now, what we do is we watch the directions, look for the setups, and trade them. Quick reminder, actually, not message. This Thursday is Thanksgiving in the US. The volume is expected to be very, very low. We will not have sessions. I don't think such days are really recommended to trade. I think it's time to get a rest. So this Thursday, we won't have a session. Okay, that's all. Thank you very much for being here, guys, and thank you for the focus. You survived more than 1 hour straight to the point. So I wish you a wonderful week, and I'll see you in the groups, and we meet tomorrow. Ciao for now.